Good morning, everyone. It's Ben Buckner and Dan Bossi back with you here today. Ben didn't join us yesterday. Welcome back, Ben. It's September 16th, Tuesday. We are, of course, had lots of information due on Friday, the USDA reports. And then yesterday with rumors that maybe the US and China had made some trade progress. I am not hearing that trade progress this morning, which I think is why Secretary Rollins came out late yesterday and suggested that there would be financial support for U.S. farmers. So we'll see how that all goes forward. But the bean market will need China at some point. Whether or not the Chinese confirm a phone call between Trump and Xi on Friday, we'll await that news. And then we have the stocks and seedings report at the end of this month on the 30th. And then the question marks start to come again. Will we have an October crop report if the U.S. government goes on shutdown? And so the odds or the tea leaves are kind of 50-50 or whether that'll happen. And then we miss all USDA data together until the government reopens. But Ben, we're a little higher this morning. The corn and bean markets are looking at a turnaround Tuesday per se. Lead us through what you think longer term and whether or not this rally will last.
Yeah, sure. And so we've got lots of things to digest, or lots of little things at least, maybe nothing really significant to sink your teeth into this morning. But at AgResource, we're big picture, fundamental, navigating the markets on a large scale basis. And so we have seen some movement in the grain and soybean markets in the last couple of weeks, but just wanted to point out, really, in reality, we've done almost nothing. So every time we get close to a major moving average, essentially, and we think we're ready to make the next move, the opposite occurs. And today is turnaround Tuesday. Markets had a lashing yesterday. Corn still stuck between its 50 and 100-day moving averages, and maybe we stay there this week. I do think that something we have talked about is we've got yield uncertainty. That debate will rage on probably for another 30 or 45 days. But making moves as you get recoveries, we still think is pretty imperative for several reasons, and we'll get into that today. But did want to highlight that we still will be watching these moving averages. And you can see here, going back a couple of months, there have been times when we've kind of broken through those, stayed there for a week, but ultimately, the shape of this chart still looks to be, mostly pointing downwards or neutral, I think. But I do think we've got, uncertainty about trade policy. Like, we have not heard anything, progressing, and then the trade deal and trade meetings in Madrid this week ended early. So this is all to us still centered on TikTok and really nothing else. We've heard nothing about agricultural trade, but the market's going to see these headlines, coming from high-level U.S. officials, and maybe it does have to move to some extent. So seeing a trade deal likely before the November deadline, those reciprocal tariffs kick in. Those are all over the financial media this morning. But again, wanted to point out, I think it's going to be tough to see China come back to the U.S. for soybeans, and that could be, like we have highlighted for a long time, and it's a very, very big deal. We've got basically confirmation China's still making moves in South America for the middle of autumn in terms of sourcing supply. So the window, it seems to me and to us, it's getting smaller, not larger. And it may close early, as I'll touch on in just a minute. So again, managing risk. Crop ratings, this may be the last week that we focus on this, as crops reach maturity in a lot of places, especially in corn, as harvest kicks off and is set to accelerate. I think these become less relevant, but corn still looks pretty good. I mean, the historical correlations would still point to a yield close to USDA's number today, about 186 or 187. 67% good excellent on Sunday. It's compared to 65% a year ago, 61% on average. So mathematically, corn still looks pretty good. Soybeans too, even though we've dropped to 63% good excellent in soybeans nationally, that's 1 point below last year, but still 4 points above the longer term average and still historically fairly high for the middle of September. So I do think there's still mathematical good evidence to support USDA's yields. They're probably about close, but now I think it's just a matter of getting the crops out of the field, and that's what we're waiting on. Let's move on with this. Let's get combine data, start to fine tune this with actual physical yields, and that is next. And I think that comes at us pretty quick. But I also wanted to communicate, especially in the case of corn, and looking at corn's chart, the move that we have made recently, is it worth managing risk, leveraging future bearish risk? And I think that the answer to that is yes. There's been a lot of talk, a lot of debate over what the reality of final acreage will be. And the acreage numbers have been, I think, the bigger surprise relative to production. The last two reports, raising corn acres by over 1 million, the last two WASDE reports. So we kind of dug into the FSA numbers, and those revisions to acreage were based solely on the FSA enrollment data as of the last 2 months. What we found that it's just incredibly boring. I know people are trying to kind of split hairs here, but when we look at even prevent plant, you can't put prevent plant against or compare it with the NASS data series. These are two separate data series, so you've got to look at prevent plant along with the FSA planted data. Putting all of that together, we've got total enrolled acreage actually down slightly from last year, and all of this looks very, very normal to us. Even having lost about 2.5 million acres in the FSA program the last 2 years, I think that's just the difference between seeing a bull market in 2023 and a bear market today. So keep in mind, the NASA's new acreage numbers have soybeans down 6 million from last year, cotton down just under 2 million from last year, and all wheat acreage down in 2025, down 700,000. That leaves room for corn acres to expand by 8 million, and that's what we're seeing in the USDA data. That's not even quite offsetting. I think it just comes down to, in the USDA's June survey, they projected total major crop area to be down 800,000 acres. We have found out that maybe it's only down 350,000 acres. So the reason I'm mentioning all of this is I do think in the corn market specifically, we do all have to contend with very, very probably 90 million acres of corn will be harvested. So it kind of begs the question, as we debate yield, how low does it have to be? Even the market's perception, how low does that number have to be to really tighten stocks or even put harvest below 16 billion bushels, which would be a record? So there's still a lot of corn coming at us in the cash market in the next 45 or 60 days. And again, I think this accelerates. I don't know if this rain will be helpful or not in the next 7 days that you see on the left across the Central Plains of Western Corn Belt. I don't think it will be hurtful by any means. But we don't see, other than this, a lot of threats to harvest. So it does get drier in the Central Plains, Northern Plains next week. So 7% of the corn is harvested today. We have just started in Illinois and Iowa. I think we'll get to 12 or 14% on Sunday, and then these numbers start to double every 2 weeks. So I think we will probably finish corn harvest by the first or second week of November. So thinking about 16.8 billion bushels of supply coming out of the field, having to be put somewhere, whether it's at a commercial elevator or on farm storage, that is still something I think we all have to deal with, at least in the cash market. So again, just the acreage in corn offsets a lot of potential yield declines in the Eastern Midwest. And we have kind of proven, I think, going through FSA data that NASS acreage numbers are about right. I don't think they're going to revise those much between now and January. Another kind of little thing happening in the background is we did this week cross the threshold in the small part of the Pacific Ocean where La Nina is not present officially, but the temperatures there are 0.5 degree Celsius below normal. So that is the ingredients for La Nina. Well, yeah, here is the latest sort of model-based forecast for the next 6 or 8 months. Maybe a very short-term La Nina event is possible. You do have to see temperatures cooler than normal for 3 consecutive months to be officially in La Nina. I think our rebuttal to this, or what we want to provide some context to, is you got to have La Nina or cool ocean temperatures, or warm, for a long period of time before it starts to impact atmospheric patterns. So I don't know if this will be deep or long-lasting enough to really change climate forecasts in Argentina and southern Brazil. And we have seen in the past that normal to cooler than normal temperatures do bode pretty well for Brazilian rainfall, where we already know it's hard to get drought anyway because of the tropical nature of that climate. And for now, all is well. And so again, we're going to be focusing on what are the odds of the next supply dislocation. That is maybe the primary thing the markets need to stay bulled up for a long period of time. Drought has ended in southern Brazil, Paraguay, and Argentina. In fact, surplus soil moisture is pretty widespread. It has rained a lot since the middle of July. This is as of last week, but soil moisture anomalies, you can see pretty clearly here that there is quite a bit of buffer should dryness develop in Argentina. And even the 10-day forecasts are starting to improve. And I think what's important, and something that we watch every 6 hours, thinking about the long-term direction of these markets, is the consistency of these forecasts. All the forecasting models have pulled into their 10-day forecast pretty heavy or normal rainfall in places like Mato Grosso, northwest Brazil, even places like São Paulo and parts of Mato Grosso do Sul. So I think this is going to be more than enough to stimulate planting. A lot of soybeans will be planted in Brazil in the next 30 days. So yield, who knows? We will get to that in December and January, but I do think that you will have soybeans from Brazil available to the export market second half of January, early February. So that defines the time period that we've got, I guess, to get a Chinese deal or get China to buy some soybeans. So it still looks to me that things are fairly weighty, but chart patterns are what they are. And I think our idea is that if we are to see some upward price moves, think very, very hard about what that means for current balance sheets, estimated returns next year. Let's kind of manage our way through this. It's still our mindset.
I think that's right, Ben. Good rundown. And, the corn market on Friday finishing higher, even with finding an extra 350 or 400 million bushels, depending upon what private estimate you want to use. I just gave the market a little technical momentum here. Whether we can keep that going and make it into what we consider the sales zone between 430 and 440 will be key. Everybody have a good trading day. We'll be back tomorrow. No U.S. export sales again this morning, which is a concern. This is the time of the year we should be making daily sales, almost daily, if I can use the word twice. That's not happening, and I think that's reminiscent of maybe a slowing export demand going forward. Be well, everyone. We'll be back tomorrow.